Hi, I'm Andrew Johns from the Cash Management Group here at Canaccord Genuity, and today I'm going to speak to you about Section 183 of the Community Charter. This is dedicated to all of our colleagues and clients who work within BC municipalities, and this is an educational piece for you. So let's break it down into the 8 categories. Category number 1 are securities issued by the Municipal Finance Authority. Municipal Finance Authority have basically 2 types of securities. Short-term securities called commercial paper and longer-term securities called debentures or bonds. They're very high credit quality, AAA rated, but generally speaking, we don't have clients invest in these simply because their yields are very, very low. Option number 2 are pooled funds made available through MFABC. Specifically, there are 3 pooled funds available to investors today. These are the money market fund, the intermediate fund, and the bond fund, as well as recently launched also a pooled high interest savings account. Item number 3 are securities that are issued by the Government of Canada or provincial government. These securities, like option number 1, tend to be very high credit quality, but again, very, very low yields. So something we don't tend to invest in too often. Option number 4, similar to option number 3, are entities that are guaranteed by the federal government or by provincial government. So this could include, the most popular would be probably MSBs, which are Canada Mortgage Bonds. You could have securities available through Farm Credit Canada, Export Development Corp, or on a provincial level, example would be Hydro-Quebec. But once again, low yielding, high credit quality securities, generally not very common for our clients to invest in these securities. Option number 5 are securities issued by a municipal government. So you have, for example, some of the big cities such as Vancouver, Calgary, Toronto, Montreal, who are active in the debt markets, as well as regional boards such as the regions of Peel, Halton, and York. And you could also consider investing some of your funds in these securities. But once again, the common theme here is that these are high credit quality securities, generally with fairly low yields. So again, once again, not very popular for most of our clients. Option number 6 are where things get really interesting. These are deposits guaranteed by a chartered bank. Now everybody's familiar with the 6 big banks in Canada. What a lot of people don't realize is there's almost 100 chartered banks in Canada, both domestic banks and foreign banks. This is an area we leverage a lot because we have relationships with a lot of banks who have strong credit ratings, excellent balance sheets, good liquidity, and most importantly, amongst all that, is stronger yields than what you can get in some of these other categories we've discussed earlier. Option number 7, similar to option number 6, are deposits that are guaranteed by a credit union. There's even more credit unions in Canada than there are banks, and many credit unions, based on where they're situated in the country, have some excellent insurance coverage backed by through their provincial regulated insurance corp. Credit unions also tend to pay very high rates of return on their deposits, and of course are really well known for committing money back to their communities. And then category number 8 are other investments specifically identified in this Act, which today, as far as we know, there are no other options available to you. Thanks for watching the video today. Let me leave one last point with you. It's very important to make sure that your investment portfolio is properly diversified. We encourage our clients to consider many of these different investment options under Section 183 of the Community Charter. One of our cash management specialists would be happy to sit down with you and design a plan that suits your particular municipality's needs. Of course, those criteria, number 1, have to be capital preservation, 2, liquidity, and number 3, yield. One of the things we're very proud about here at the Cash Management Group is we've dispelled the myth that for some reason, if you get a higher yield, you must be taking on more risk. In fact, we argue that we actually do a great job of helping our clients with reducing their risk by diversifying their portfolio. We look forward to speaking with you.